Hi again, Paul Heinze, and gladly with Greg Wright of Masuda Funai for part two of our halftime summary for 2021, which really has had some interesting activity. Welcome back, Greg. What's new?
Thanks, Paul. Good to be back. Um, well, I think perhaps the most notable thing today, and this is developing just as we're speaking and recording, is it appears the Biden administration has reached a compromise with a bipartisan group of senators on an infrastructure package. Rather, the numbers we're getting, and this is all very preliminary, are that we would be looking at about 1.2 trillion in infrastructure spending over 8 years, about 500 or 600 billion of which would be new spending. Um, and unlike what we were looking at before in the Democratic proposals, where there could be a rollback of some of the Trump era tax relief, uh, the early word from the White House and others in the Senate is that this package is likely to be paid for by utilization of unpaid portions on the relief bills that have been passed the last couple of years, and then possibly the sale of some of the strategic oil reserve, but potentially not any rollback on existing tax relief. So, I mean, that would be a positive, I think, for for business and for your clients, sort of across the board.
Yeah.
That truthfully, we could see some other elements of infrastructure planning, in future bills. The Biden package had been about twice that, and there's always a possibility of more spending later on. But at this stage, it looks like the financing may already be there for the agreed upon amount.
Refreshing surprise. That's good.
Yes, no, I think so.
That's good.
I think so.
What's trending in your area? What do you see as things popping up in terms of legal matters?
Well, I mean, like we talked about last week, we're coming out of the pandemic. This is a good time, I think, to really consider whether or not you want to carry on with the business, carry on in the business that you've owned, or if this is the right time to consider stepping away, or realizing the benefits of the long-term hard work. And now that the infrastructure package appears to be headed toward a mutually agreed form of legislation, the next focus in Washington is likely to be on the president's other priorities and the upcoming budget. I mean, in those areas, we could actually see some movement on other taxes like capital gains and ordinary income. When Joe Biden ran for president last year, he did make a pledge that he wouldn't raise taxes on Americans. I believe the threshold was who made less than $400,000. And so if there is tax reform, it's likely to fall more heavily on the upper ends of income. And oftentimes when you're preparing to sell a business or do sell a business, you suddenly find yourself in a higher tax bracket. So this could affect a number of business owners who are reaching retirement or are considering moving into other ventures. So the proposals we've seen, and last week I said there really aren't any there's no formal mature legislation being considered, but the administration has issued some proposals to pay for things like childcare, universal preschool for 3 and 4-year-olds, and community college, and subsidizing childcare, other tax cuts for lower and middle income Americans. And there are a couple of items they're looking at adjusting to pay for those priorities. One would be an adjustment of the ordinary income for higher earners back from 37 to 39.6%. The second would be capital gains. So you could be looking, if you're a household earning more than $1 million under Biden's plan, you could be looking at long-term capital gains rates that match that 39.6% ordinary income bracket. In addition to that, there are some shifts potentially with a Medicare tax that I believe was put into effect in connection with the passage of Obamacare, about 10, 12 years ago now. And that's another 3.8%. It's already applicable in some areas, but not to all income. So you could find yourself in a situation, if you're selling a business here in the medium term, where you have an effective tax rate, if you're over $1 million in proceeds, of something in the mid 40% just with federal exposure. Now it's not clear. Obviously, this could go through on reconciliation. The Democrats could pass it more or less with the 50 votes they have in the vice president, and then with their majority in Congress. But it's not clear when it would be effective, if it would be retroactive to 2021, or more likely, I think it would be effective going forward. In which case, it underlines the point that this is a good time, I think, to maybe look around at what is a strengthening, solidifying economic situation, good financing terms available, and to really consider, whether or not it's an opportunity to test the value of your business in the market.
I think that what you're saying points very clearly to the fact that there is change afoot. We're uncertain as to what it's going to be, which points right back to the owner saying, be prepared, be organized. And some of the things that we, in our aspect of M&A and search and sell of corporations, is the employment agreements, the stock purchase agreements, the buy-sell agreements. Could you comment a little bit on some of the trends that may be occurring in a buy-sell agreement? Suddenly, we're faced with the imminent higher tax rates of capital gains or income or what have you. It's time for the owner to look at any agreements that he or they are bound by. What would your perspective be in that area?
So if you're operating a closely held business at this stage, particularly with fellow investors or other key employees, and you don't have a shareholder agreement or a buy-sell agreement or some sort of written arrangement discussing things like governing issues of management, economic rights, and your ability to buy and sell, you really should consider entering into one. If you have one, and there's a possibility over the next couple of months or years that you could be selling the business altogether, or one or more of the principals could be exiting, again, a good time to take a look at those terms. And these can be very simple or very complex documents depending on the context of the business and the relationship of the individuals. But the major issues that are usually covered are sort of management rights. So, for example, if you have a board of directors or managers, who has a seat at that table, and which of their decisions are subject to approval by, smaller owners or by other individuals who are not at that director's table. From an economic standpoint, obviously you would like the economics of a company to be driven by respective investment, both financial investment and the sweat equity that goes into the business. And so figuring out when and how cash can be distributed to the shareholders is often covered, is usually covered. And also, depending on how your business is structured, if it's a pass-through, like an LLC or an S-Corp, you're going to have to pay taxes if you own a piece of that business. And you may want some guarantees in there that if it's possible that some of that cash will come your way to cover your tax liability during the year. In addition, you get to issues like buy and sell and put and call rights. So, for example, in a closely held business, usually those shares are not, they're not publicly held. They're closely held, and there are restrictions on when you can and cannot transfer those to others, either within the business or to third parties. Oftentimes, they'll include things like rights of first refusal. If you're a continuing shareholder, you don't necessarily want to do business with whomever one of your partners finds out in the market. So you want to have some control and some ability to influence that. And then, to the extent there is a third-party sale, is there any right of influence by the other, the other managers, the directors, the other shareholders on that? And then I guess the other point would just simply be, life sometimes comes at you fast, and so in events such as death, disability, divorce, you could again find yourself as a continuing shareholder running a business with partners you didn't select and you don't know very well, or who are not well versed in making business decisions. And so you may want to have an automatic trigger that permits you on pre-existing, pre-agreed terms to purchase the equity of the departing individual. In any event, if you want an opportunity to buy or sell your equity back to the company or to another shareholder, to a third party, you may want to have a mechanism that values that equity with an independent party who takes a look at the company and its assets and its balance sheet to determine what it's worth, so that you can come up with terms upon which a departing party, a departing shareholder can do so sort of gracefully as previously agreed, rather than, as these situations are often difficult and frayed, under terms that are quickly fleshed out between parties that are otherwise stressed and focused on other things. So that's what I would look at there. You could also look at getting potentially a key man life insurance policy to make sure that there's some cash there for the company to buy out someone in the event that they pass away, become disabled, or otherwise incapacitated.
It's time every year for a owner or partners to review some of the key documents. Certainly the buy-sell agreement.
Mm-hmm.
Many owner groups, partners, or more than two people,
Mm-hmm.
are looking at the percentage of ownership, and oftentimes one says, well, I have 51%. Well, they don't realize that the laws have changed to the rights of minority shareholders, not the same as it had been perhaps when the corporation was founded 15 or 20 years ago. Things have changed.
Mm-hmm.
What is 66 and 2/3% absolute majority still at this time in ownership? Or how is that structured now?
I mean, there are provisions under, for example, the Illinois Business Corporation Act that that reference particular voting thresholds for shareholders, but they're few and far between. For the most part, absent an agreement to the contrary, a board of directors for a corporation can take action on most ordinary course, even some significant items, with a majority of the board. There are circumstances where you have to go to shareholders, circumstances like where you're selling substantially all of the business, and certain circumstances where you're merging the entity out of business. And then oftentimes, if you enter into a shareholder agreement, there will be particular provisions in there that require a board of directors contractually to seek consent from its shareholders. Paul, you bring up a very good point. There's case law out there that indicates that simply because you own a majority of the company or because you have a majority of control in a company doesn't mean that you can engage in obviously oppressive activity toward minority shareholders. And even if what you're doing is arguably reasonable, you could find yourself in a situation where you're defending litigation on an exit where you're doing so over the objection of a minority shareholder. So you've got to take care and you've got to find appropriate guidance and counsel when you're taking these major decisions, so that you don't end up paying a large portion of the proceeds out to defend litigation on the back end.
So the message here today for all of you business owners is be prepared. Notwithstanding whether you were a Boy Scout or not, be prepared. Take the documents out of your desk drawer and dust them off and read them again. Make sure you have some term insurance on you if you are insurable or if you have suddenly become uninsurable. That will affect estate matters. It'll affect the cash flow operation of the business in case of your demise and so forth. You can see that operating a successful business in these times is becoming more and more challenging. It's important for you to get good legal advice. Greg, how can they get in touch with you if they'd like more answers from you?
Well, again, I'm Greg Wright with the firm of Masuda Funai. You can reach me by email at gwright, GWRIGHT, at masudafunai.com. That's MASUDAFUNAI.com. Or you can reach me by telephone at 312-245-7496.
We're here to help you continue the successful operation of your corporation and to make logical decisions on the succession going forward. If ever you have any questions, we would be delighted to talk with you. We hope you continue to tune in and listen to our perspectives from various different professionals so that you can assure your success. For Greg Wright, I'm Paul Heinze. It's really good that you were with us, and we look forward to seeing you again. Bye for now.